Welcome to Business Middle East. This week we're discussing the upcoming crucial meeting of the European Central Bank. The eyes of the business world will be closely following the gathering where the bank's president, Mario Draghi, will outline his latest thoughts and intentions on eurozone monetary policy. Speculation and hints on different possible scenarios of the bank's decisions are casting a shadow over the euro. Last week it fell to its lowest level against the US dollar in 7 months, and its performance against a basket of other global currencies has also been weak recently. But before we look at some of those ECB scenarios, let's see the story.
The European Central Bank has hinted many times that it will act quickly if required in order to increase the rate of inflation in the eurozone. This week the ECB holds its monetary policy meeting, and on the agenda will be the possibility of further quantitative easing. The ECB President, Mario Draghi, has admitted the goal of 2% inflation will take longer to be achieved. However, on November 20th, he defended the bank's quantitative easing programme, saying it has brought down borrowing costs for eurozone companies. Uncertainty over the ECB meeting has led to a fall in the value of the euro over the past month against most major currencies. Against the US dollar, it's fallen by 3.83%, against the Japanese yen by 2.17%, UK sterling by 1.21%, and the Chinese yuan by 2%. Against the Swiss franc, however, it increased by 0.43%. Inflation forecasts will be updated by the ECB as well during the meeting, and some officials have already said that conditions have worsened since its latest estimates were published in September.
To discuss some of the ECB scenarios, we're joined by Nour Eldeen Al-Hammoury, the Chief Market Strategist at ADS Securities in Abu Dhabi. Welcome. We know there are different scenarios expected from the meeting this week. Can you give us any details?
There are
many possibilities. Firstly, the ECB may cut the deposit rate by another 10 basis points to minus 0.3%. The second scenario is to increase the current quantitative easing programme, which currently stands at 60 billion euros a month, to 70 or 80 billion. The third scenario, the European Central Bank may extend the length of the current quantitative programme beyond September 2016, when it's supposed to expire. That extension might be until December 2016 or even March 2017. And the final scenario is to keep the current policy on hold with no change ahead of the Federal Reserve decision in the US. The ECB might need to wait and see what the Fed does, because if the Fed raises the rates in December, then there'll be no pressure on the ECB to intervene, as the euro will remain under pressure, which is what the ECB needs.
That's right. And speaking of that pressure, what do you think will be the impact of each of the ECB scenarios on the euro?
Cutting the deposit rate further will of course increase the pressure on the euro. However, this doesn't mean that the euro will reach parity with the dollar very soon, but it might get close to it. If the ECB increases the current QE programme, the euro is likely to drop significantly and quickly to parity with the US dollar. And this might occur within a few days. Extending the QE expiration date might not have that big a negative impact on the euro, as there's no new money supply from the ECB. Therefore, the euro might stabilise for a while. Finally, keeping the current policy unchanged would be a positive factor for the euro, as everyone was pricing in further easing measures by the ECB. Therefore, the euro may stabilise ahead of the Federal Reserve decision.
Which scenario is the most likely decision for the ECB in the current situation?
It's hard to predict the ECB action when the Federal Reserve decision is still around 2 weeks away. However, looking at the ECB history, the bank never eased its policy when the manufacturing and services PMIs improved. This is what we noticed last week. The PMIs are at the highest readings for over a year. However, we believe that the ECB may extend the QE until 2017 or at least the end of 2016, with a very small possibility of cutting the deposit rate by 10 basis points.
Let's talk about the Middle East. What will be the effects on the MENA markets and currency trading in the region in the event of an extension of quantitative easing in the eurozone?
As we noticed before, whenever any of the global central banks eased their policies, this always had a positive impact on global equities, including MENA. Therefore, regional equities may go up for a while. However, crude oil remains the main driver in the current period ahead of the OPEC meeting during the week. As for the euro here, we noticed that the majority of our clients are favouring selling the euro even on limited bounce, which was a successful strategy throughout the year in the Middle East and the world. Moreover, the short positions and trading volumes have reached the highest level since May. Back then, the markets were pricing in an interest rate hike by the Fed in June, and even the MENA equities were trading at their highest levels this year.
Thank you, Nour, for joining us. That's all for now. Thanks for watching. See you next week.